Hello guys, very good morning, good afternoon, good evening for all of you. So hope you guys are doing good. We have completed chapter 2, finally the lengthiest chapter. So now we will be starting with chapter 3, which talks about input tax credit and computation of GST liability, guys. This is also a bit lengthy concept or bit lengthy content, but still not as much as chapter 2. Clear? Yes, that is why chapter 2 is bit lengthy. I do understand. That is why I have divided it into 3 parts. Chapter 2.1, chapter 2.2 and chapter 2.3. Hope you guys are doing well and you have studied whatever has been covered. Now we would be starting something called as input tax credit, guys. Section 16 to 21 of Cgst Act talks about the input tax credit. In addition to this, we will be covering some more section in this chapter called section 4950, which talks about payment. So we'll be covering two topics here. Means actually input tax credit is the main topic. Along with that, we will also be covering the computation of GST liability also, which is covered in section 49 and 50, guys. Chalo. So we'll start with this chapter. So before I start, I will just explain the concept, whatever we would be covering in this chapter. Then we will go through the provisions, guys. Is that clear? Chalo. We'll start with. Pay attention. Now, there is a supplier. There is a supplier who supplied goods to the recipient or services, anything. So, for the recipient, what is it? Inward supply. We call it as what? Inward supply. Whereas for supplier, what do we call it as? Outward supply. Means it is a sales for him. Yes, sir. Now, supplier has supplied some goods or services to the recipient, for which, let us assume, the supplier has charged 1 lakh rupees. He has charged how much? 1 lakh rupees. Okay. On that, he is liable to pay GST. Who? Supplier. Supplier is the one who is liable to pay GST. So he is liable to pay 10,000 GST. So what did he do? He collected 1,10,000 from the recipient. How much? He collected 1,10,000 from the recipient. 1 lakh is supplier's revenue. Remaining 10,000, supplier has to deposit it to the government. He has to deposit it to the government. Agree? Some time limit and all is given to the supplier. He need to deposit it to the government. And please pay attention. One by one I will be explaining here. So please be very attentive. So supplier has made an outward supply to the recipient. For the recipient, it is an inward supply, which is nothing but purchases. He has supplied for 1 lakh. On that, the supplier is liable to pay 10,000 GST. So supplier has totally collected 1,10,000 from the recipient. 1 lakh is supplier's revenue. 10,000 he has to deposit it to the government. Okay, sir. Next, supplier should also file one document called Gstr 1. Gstr 1. That is GST returns 1, where he will give the details of whatever outward supplies he has made during the month. So GSTR has to be filed every month. Now they have brought something called as QRMP scheme also, where small suppliers can file quarterly returns. We will see that later. We will be learning about QRMP scheme when we go to returns chapter in detail. Whatever is required to some extent, I will explain it here in this chapter. Chalo guys. Now supplier every month. So for example, June month, whatever supplies, outward supplies he has made during the month of June, he has to give the details of that supplies in GSTR 1 to the government or to the department within 11th of July. Clear? So whatever supplies he has made from 1st June to 30th June, he has to give the details of that to the government in GSTR 1 within 11th of July. That is 11th of next month. This is the supplier's responsibility. So what did the suppliers do? He collected the tax from the recipient and he gave it to the government. And also supplier will issue invoice for how much? He will issue an invoice. We call this as tax invoice for 1,10,000 to the recipient. Okay, sir. Now coming to recipient. Whenever we are learning input tax credit, it is always from recipient point of view, because recipient is the one who will claim input tax credit. Now, coming to recipient, for recipient, ITC, whatever tax he has paid on his purchases, we call it as input tax. How much? 10,000. Now the question is, can he claim the credit of it? Whatever tax he has paid on his inward supply, we call it as input tax. And that inward supply can be any three. There are three forms here. It can be inputs, it can be input service, or it can be capital goods. I repeat, inward supply can be in input or input service or capital goods. Capital goods is nothing but fixed assets. Okay, sir. Now, recipient has paid 10,000 tax on his inward supply. Now, can he claim the input tax credit of it? Means, what it means, sir? What is input tax credit? Now, assume recipient is further supplying the goods. He is not the consumer. He is a businessman who is registered under GST. A recipient is registered under GST. He is supplying the goods to his customer. So, what is it for him? It is outward supply for him. For whom? Recipient. Okay. On this, assume recipient is charging to his customer 2 lakh. On that, recipient is liable to pay 20,000 GST. So he is collecting 2,20,000. So this is the second supply, guys. First, recipient purchased the goods from the supplier. Next, he is supplying it to the customer. Now he is becoming supplier, because for this supply, whatever I am talking about, recipient will become supplier. Agree? Because he is now supplying to the customer. So in that case, he will become the supplier. Okay. Now, recipient on his outward supply, he is liable to pay 20,000 GST. So from his customer, he will totally collect how much? 2,20,000. Okay, sir. 2 lakh is for him, 20,000 is for the government. But will he pay entire 20,000 to the government? No, sir. So we call this as output tax. What do we call it as? Output tax. The tax which is payable on outward supply is called output tax. Okay. Now, on my inward supply, I have paid an input tax of 10,000. There are certain conditions, restrictions which you have to satisfy. If you satisfy that, okay, you can claim a credit of it. Input tax credit. How much? 10,000. And only remaining 10,000 you will pay to the government. That is GST payable in cash, we call it as. Payable in cash. Literally not in cash. We will see how it will be paid and all. So means after utilizing the credit of 10,000, the recipient, who is now the supplier, will be paying only 10,000 GST to the government. Now, sir, claiming this, is it so easy? Can the recipient claim it however he want? No, there are certain conditions and restrictions under section 16, guys. So recipient has to satisfy certain conditions. Let me put it here. Just a second. Yeah. The recipient has to satisfy certain conditions. What are those? One by one. Please pay attention. If you want to claim input tax credit of 10,000, whatever tax he has paid on his inward supply, then section 16 and 17 puts some conditions. If you satisfy that, okay, you can claim it. So what are those, sir? One by one. First, recipient is registered. He should be registered. Means if recipient is unregistered, you cannot claim the input tax credit. For example, you and me are not registered under GST. Now, if I purchase anything on which I have paid GST, can I claim input tax credit? No. Why? I am not registered under GST. Okay, sir. So recipient should be registered. Next, outward supply. Whatever outward supply. Okay, just a second. Whatever input or input service or capital goods is purchased, is used in business or profession. It is used in business or profession. It should not be used for personal purpose. Only if whatever input service or capital goods you have purchased on which you have paid input tax, it should be used for business purpose. Then only you can claim credit. If not, you cannot claim credit. Okay, so next. See, this also conditions are there. We'll come to the supplier's condition later. Next, recipient as received goods or services. Whatever he has purchased, he should have actually received it. Okay, sir. It should not be like something like dummy purchase. Okay, sir. Next, recipient should have invoice or other document. He should be having whatever invoice the supplier has issued now. So as a proof, he should be having it. Who? The recipient. Because if by chance, if there is any investigation, inquiry, anything from the department, if they ask, you should be able to submit it. So whatever invoice or any other document which is issued by the supplier to the recipient should be having a copy of it, whether e-copy or physical copy, whatever is fine. Okay. Next, supplier should have deposited this tax to the government. That is, from recipient, supplier has collected 10,000 tax now. So recipient is claiming the credit of this. When can he claim the credit? Is only if this amount is deposited by the supplier to the government. Okay. So E point is supplier has deposited tax. Whatever he has collected from the recipient. Okay, sir. Next, supplier, whatever tax he has collected and what supplies he has made to the recipient. Now, he should have given the details in Gstr 1. That is very important. Whatever supplies the supplier has made to the recipient, he has to give the details in Gstr 1. Only then the recipient will be able to claim. They have tried to make it something called as automated. Okay, so what is this? Actually interesting. Pay attention. Now, the supplier has made outward supply to the recipient. So the supplier will file Gstr 1. Okay, sir. So based on that, whatever details he has given in his Gstr 1, the credit for the recipient will auto-populate. It will automatically populate in the Gstr 2A and Gstr 2B of the recipient. Okay, based on that, the recipient will be able to claim. So for example, now if the supplier has made an outward supply to the recipient, but he failed to give the details in his Gstr 1, can recipient claim the credit? No, because it will not be reflecting in Gstr 2A of the recipient. Clear? Actually, there is two things, Gstr 2A and 2B, one and the same, but small difference is there. I will be explaining the difference between these two in returns chapter, guys, because Gstr 1, 2, 3, all these things are covered in returns chapter. So whatever is relevant now, I am explaining it. So you need not worry. Just understand whatever I am explaining. Because see, it is not possible to cover each and everything here only. Because in returns chapter, we have to learn each and everything in detail. Definitely, I will be doing it there. So now, please pay attention. The supplier, whatever outward supply he has given to the recipient, he need to give the details of that in Gstr 1 within 11th of next month. And once he files Gstr 1, with respect to whatever details he has given in his Gstr 1, it will automatically reflect to the respective recipients in theirs Gstr 2A and 2B. So recipients, whatever credit is reflecting in their Gstr 2A, 2B only, they can claim it. Now, if the supplier has failed to disclose or report as outward supply in his Gstr 1, it will not reflect in the Gstr 2A or 2B of the recipient. So in that case, can they claim the credit? No. So under GST, means recently they have made all the things automated. So only if it is auto reflecting in your Gstr 2A, 2B, you claim it. If not, forget it. That is what they are trying to tell. Yeah. Okay. So supplier as reported outward supply in Gstr 1 or invoice furnishing facility. Invoice furnishing facility. See guys, recently they have introduced one scheme called QRMP, quarterly return monthly payment. See, whoever is registered under normal scheme, that is section 9, they were supposed to file monthly return and pay tax monthly. But for some small suppliers who have not opted for composition scheme, they are under normal scheme only. But for them, filing every month return might be difficult. So government brought some scheme called QRMP scheme, where the small suppliers who are under the normal scheme will file the returns quarterly, but they have to pay the tax monthly. They will pay tax monthly, but they will file the returns the quarterly. Clear? This is a bit lengthy topic which we'll be discussing in detail in again returns chapter. Clear? Yes. So in that case, whoever is following QRMP scheme, means if the supplier is opting for QRMP scheme, they will be filing returns quarterly. They will be filing GSTR1 quarterly. So in that case, the details of outward supply can be given using invoice furnishing facility. There is something called as invoice furnishing facility. So the supplier can give the details of his outward supply in invoice furnishing facility monthly, not quarterly, because he will be filing GSTR1 quarterly. Yeah. So maximum people are covered under monthly only, because maximum people will file GSTR1 monthly and also pay tax monthly. But if you are a small supplier who is under normal scheme, who is following QRMP scheme, in that case, you might be filing GSTR1 quarterly, but you can give the details of your outward supply in invoice furnishing facility every month, based on which the recipient will be able to claim their credit. Clear? Yes, sir. Next. So supplier has reported the outward supply in his GSTR1 or using invoice furnishing facility if he is opting for QRMP. Okay, sir. Next. So from supplier point of view, done. Next, recipient should have filed GSTR 3B. Recipient has filed GSTR 3B. Sir, what is this? See, every person who is registered under the normal scheme is supposed to file 3 returns, guys. GSTR 1. GSTR 1 is for what? To give the details of outward supplies only within 11th of next month. 11th of next month. Okay, sir. Every month it has to be filed. Next, there is something called as GSTR 3B. So GSTR 3B has to be filed within 20th of next month to give the details. It is like a summary return. I have to give the details of my outward supply, inward supply, plus whatever credit is reflecting in my GSTR 2A, 2B. So for every recipient, obviously we will also be supplying the goods. So now for the recipient, whatever credit is eligible will be reflecting in GSTR 2A, 2B based on the details given by the supplier in his GSTR 1. Okay, sir. So he has to take the details and file the returns GSTR 3B. So in GSTR 3B, he will give the details of outward supply, inward supply, and assume on outward supply he was liable to pay tax 1 lakh. On inward supply, there is a credit of 20,000 which is reflecting in GSTR 2A, 2B. He will claim it. Remaining amount he will pay and then file GSTR 3B. So before filing GSTR 3B, if any tax is due, the supplier has to pay and file it. Clear? So this will be filed every month. By chance, if the supplier has opted for QRMP scheme, that is quarterly return monthly payment, they will file both GSTR 1 and 3B quarterly. They will file it quarterly. Okay, sir. Plus, there is one annual return. There is one annual return in GSTR 9, which has to be filed within 31st December of next year. Not next month, 31st December of next year. That is, assume I am filing GSTR 9 for financial year 21-22. It has to be filed on or before 31st December 22. Clear? So every person who is registered under the normal scheme, that is section 9, they have to file totally 3 returns, 2 monthly returns, 1 annual returns, guys. Clear? And if they have opted for QRMP scheme, GSTR 1 and 3B will be filed quarterly and GSTR 9 will be filed annually only. Is that clear? I will repeat, guys. So please pay attention. GSTR 1 will be filed by every supplier to give the details of his outward supplies only within 11th of next month. Okay. Next, based on the details given by the supplier in GSTR 1, the credit will auto-populate to the recipient in his GSTR 2A and 2B. Okay, sir. And using that, the recipient also will be a supplier. So he will file GSTR 3B, where he will disclose the information with respect to outward supply, whatever he has already given in GSTR 1, then inward supply and the tax amounts. So what is the output tax? Okay, take it. Then what is the input tax credit? You are eligible, claim it. Remaining amount you pay and file GSTR 3B. within 20th of next month. So, and you will also file GSTR 9 by giving the details of whatever you have filed in monthly returns from April to March, whatever details you have filed in GSTR 1 and 3B, the summary of that has to be given in GSTR 9 and it has to match with your monthly returns. That is very, very challenging actually under GST practically, not academically. Academically and all, it's not covered for us, like how to match and all. Yeah. Fine, guys. So these are some important points. There are some more which we will be covering, but these are the very important points which I have explained. So if you guys want, you can take down. Okay, I repeat, whatever tax is paid on inward supply, we call it as input tax. Your inward supply can be inputs, that is raw materials, or input service, or capital goods, which is nothing but fixed assets. But if you want to claim the tax, that is input tax, if you want to claim the credit of input tax, first recipient should be registered under GST. Then whatever inward supply you are taking, it should be used in the business, not for personal purpose. That is, for example, if you have purchased raw material, it is used to produce your output. Or else you have purchased capital goods. Why? To use it in your business. Then you have taken input service. Why? To use it in your business. It should not be for personal purpose. If it is for personal purpose, you cannot claim your input tax credit. Okay, sir. Next, the recipient should be having the invoice which is issued by the supplier or any other document. Then supplier, whatever tax he has collected from the recipient, he has already deposited it with the government. If not, recipient cannot claim the credit, because recipient can claim the credit only of the tax which the government has already received it. If government has not received it, then recipient cannot claim the credit of it. Okay, sir. Then coming to supplier has to give the details of his outward supply which he has made to the recipient in his GSTR 1 or using invoice furnishing facility. Okay. Then coming to the recipient also should file his GSTR 3B. Then only he will be able to claim his input tax credit. And one more important thing, for recipient is making taxable outward supply. Outward supply means whatever tax you have paid on your inward supply, you can claim the credit of that only if your outward supply is taxable. That is, the recipient is supplying the goods to the customer, na outward supply is there, na only if this is taxable supply, he can claim the input tax credit. If by chance, if this is exempt supply, then the recipient is not paying tax on his outward supply, so he cannot claim the credit of input tax. That is what they are trying to tell. Okay, so if you are liable to pay tax on your outward supply only, you can claim the credit of input tax. That is one more point. Yeah, yes, guys. So this is all important things. So please, just a second, you guys can take down this. Just like, okay, it will help you to quickly revise whatever we will be covering it from now. We have not yet gone to the provisions. I have just explained the concept here. We call this as input tax. Outward supply, inward supply. O bar W means outward supply, I bar W means inward supply. So anything else? Then this is first party is supplier, then the second party is recipient, the last party is customer, for whom the recipient is the supplier. Clear, guys? I will just mention these points so that you can take it as I have used short forms one by one. Section 16 and 17 put some conditions to the recipients to claim credit. So what are those? Some of the important points I have highlighted here. Recipient should be registered under GST. Input or input service or capital goods, whatever the recipient has received, it should be used in the business or profession. Then R has actually, that is recipient has actually received the goods or services. Then coming to D point, recipient should have invoice or other document which is issued by the supplier. Should have means he should have it either in e-copy or physical copy, guys. Next, supplier has deposited the tax, whatever he has collected from the recipient. Then supplier has reported the outward supply in his Gstr 1 or invoice furnishing facility if he is following QRMP. Then R has filed Gstr 3B, that is recipient has filed his Gstr 3B in which actually he will claim input tax credit. Okay, so Gstr 3B is the returns in which the recipients will claim their input tax credits. Then R is making, that is recipient is making taxable outward supply. Only then he will be able to claim the credit of input tax. If his outward supply is exempt under GST or nil rated under GST, he cannot claim the credit, guys. Clear? Chalo. So now we will get into our material. We will see one by one. Whatever is required in detail I have covered, guys. So we'll be learning each and every bit of input tax in this chapter. And now coming to exams. Sir, from exam, how important is this chapter? Yes, guys, this chapter is important. Questions are asked in almost all the attempts except one attempt, I guess. Questions are asked, and whenever I am discussing about question paper or question paper questions, it is always under new syllabus, because now everyone are under new syllabus. So any questions I would be discussing will be under new syllabus, guys. Clear? Yes. Chapter 3, that is input tax credit and computation of GST liability. Input tax credit, the tax is paid on inward supply of inputs. Inputs is nothing but raw materials, guys. Capital goods, which is nothing but like fixed assets. I'm just telling it in normal terms. In GST language, we call it as inputs, which is nothing but raw material. And capital goods is in GST language. It is nothing but, in accounting term, we call it as fixed assets, like that. And services are called input taxes. This may be integrated tax, Cgst, that is central GST, or state GST or union territory GST. Means it can be anything which is paid under GST. Taxes paid under reverse charge mechanism and IGST paid on import are also input taxes. Now this is important point. Sir, supplier has supplied the goods to the recipient, on which recipient has to pay tax under RCM. Now for the recipient, is it an inward supply or outward supply? It is inward supply only. But the scenario might be different. Here, supplier is not liable to pay tax. Recipient is the one who is liable to pay tax. So now, on his inward supply, whatever input tax he pay, can he claim a credit of it? Yes, because it is again an inward supply on which he himself has directly paid the tax to the government. Under forward charge, supplier will collect it from the recipient and give it to the government. Okay, it is like indirectly going to the government. But here, recipient, he himself is paying to the government. On what? On his inward supply, not on outward supply. So, recipient, if he is paying tax on his inward supply under RCM, it is again input tax only, not output tax. Clear? And whenever there is an import of goods or services into India, IGST will be paid on that, guys, because import or export will be treated as interstate supply. So on import, IGST would be levied, which can be claimed as credit, subject to certain conditions. So what are those conditions and all? We'll be learning it in customs part for claiming IGST on import. Okay, and here whatever we learn also is applicable for that. Clear? Means under section 16, 17 or 18, whatever we learn, section 16 to 21 talks about input tax credit, guys, and it is common for both intrastate supply as well as interstate supply. There is no separate provisions for input tax credit under IGST Act. So section 20, I already told, section 20 of IGST Act tells if any provision is not separately covered under IGST Act, then whatever is covered in Cgst Act as it is will be applicable for interstate supply. So even for input tax credit, there is no separate provisions covered under IGST Act. So whatever we learn under Cgst Act will be applicable for both intrastate supply as well as interstate supply. Clear? Yes. Next. The credit of above taxes is called input tax credit. So whatever input tax is there, the credit of that is input tax credit. That is, the taxes paid on inputs are available as set off against the taxes payable on outward taxable supply. So that is what I showed you. That recipient has paid tax on his inward supply, how much? 10,000. Okay, that is input tax. Then on his outward supply, how much tax is liable to pay? 20,000. What do we call it as? Output tax. So on output tax, is adjusting his input tax. So can he adjust it? How can he adjust it? That is what we are learning in this chapter. Cgst Act 2017 contains the provisions relating to ITC. ITC means input tax credit, guys. So sometimes short forms would be used. Its availment, utilization, and conditions and restrictions attached therewith. Input tax credit is considered as a cornerstone of GST. In the previous tax regime, there was non-availability of credit at various points in supply chain, leading to cascading effect of tax, that is tax on tax, and therefore increasing the cost of goods and services. So under previous indirect tax regime, we have understood in chapter 1 how previous indirect tax regime was working and how the things have been changed under GST. So under previous indirect tax regime, there were a lot of taxes which were levied on different taxable events, and there was no credit available to be set off like of one tax against the other tax. So it was leading to what? Cascading effect. But under GST, the cascading effect has been reduced. This flaw has been removed under GST. They removed under GST, they are telling, yes, to some extent they have removed it. I cannot tell it completely they have removed it, guys. That means they have not made, cascading effect has not been made to zero, but it has been drastically reduced or removed. Under GST, a seamless flow of credit throughout the value chain is therefore available, consequently doing away with the cascading effect of taxes. To avail the benefit of ITC, it is required that the person availing such benefit is registered under GST. Means the recipient who want to claim credit should be registered under GST. And obviously, who will get registered under GST is, see, if you and me is only purchasing the goods or services, we will never be registered under GST. When a person will be registered under GST? When he is providing some supply. He is providing some outward supply. Okay, for that, he is taking some inward supply. So in that case, the recipient, whoever has taken inward supply, is also providing outward supply, is also a supplier. Only then he will be registered under GST. Agree? Yes, sir. An unregistered person is not eligible to take the benefit of ITC. Section 155 of Cgst Act states that where any person claims that he is eligible for input tax credit under this act, the burden of proving such claim shall lie on such person. So if any person is telling, I am eligible to claim a credit of 1 lakh or 5 lakh, 10 lakh or whatever amount, the responsibility is with him to prove that he is eligible to claim the credit. He is the one, the responsibility, or onus we call it as ONUS. The onus is with the person who want to claim the credit. Okay, next. Section 49 subsection 5 of Cgst Act 2017 provides for utilization of ITC in electronic credit ledger for payment of GST. So section 29 talks about like how to utilize the credit. So utilization of credit we will be learning at the end of this chapter, but we will first understand how to claim the credit or how to avail the credit, how to take the credit we will see first. How to utilize it we will see later. That is the later part of this chapter. Okay, sir. Next, provisions of ITC under Cgst Act have also been made available or applicable to IGST Act, White Section 20 of IGST Act. So that is what I told you. Whatever we will be learning in section 15 to 21, it will be applicable for both intra and interstate supply, guys. Clear? Yes, sir. And one more important point. See, whenever a person gets registered under GST, on his GST profile, it means he will have a profile on GST portal. GST portal, whatever profile he will be having 3 ledgers in his profile. What are those 3 ledgers? Electronic credit ledger, electronic liability ledger, and electronic cash ledger. So what is electronic credit ledger? That is, whenever he is eligible to any credit, I told you whatever credit is reflecting in GSTR 2A and 2B for a person, it will be automatically credited to electronic credit ledger of a person, means recipient. Clear? And whenever he is using it to pay against the output tax, it will be debited there. Clear? So in electronic credit ledger, whenever the credit is available for him, it will be credited, and whenever he is using it, it will be debited there. That is similar to our ledger which we maintain in accounts and all. Okay, sir. Then coming to liability ledger and cash ledger. Liability ledger means whatever a person is liable to pay on his outward supply will be recorded there. And coming to cash ledger, whatever a person is paying in cash to the department, that is GST, okay, it will be recorded in that cash ledger. So in detail about this three ledger, we will be learning in the later part, guys, okay, in coming days. In detail, we will be learning because these are covered in sections 49 as well as some rules in detail, like in each of this ledger, what will be debited, what will be credited. But as of now, electronic credit ledger is important for you because we are dealing with input tax credit. So in electronic credit ledger, whenever a person is eligible for a credit, the credit will be credited to electronic credit ledger and he can use it. And when he is using it to pay output tax or he is adjusting the input tax against the output tax, in that case, it will be debited in his electronic credit ledger. In his electronic credit ledger. Is that clear, guys? Yes. Now some relevant definitions, some important terms, whatever we will be discussing in this chapter or what we have already discussed, like capital goods, input tax, input service and all. So it has been defined under Cgst Act. What are the definitions we will be going through? Capital goods, and very easy definition, nothing complicated here, guys. Just try to connect it with something related to accounts. If you have some knowledge about accounts, it will be easy for you here. Capital goods. See, guys, in general term, capital goods is nothing but fixed assets. So fixed assets, if you have purchased any fixed asset, what will you do? You will capitalize it in your books. You will capitalize it in your books means you will show it in the balance sheet. You will not debit that expenses to P&L account, because in P&L account, only the revenue expenditures will be debited. Now we call it as statement of profit and loss. Agree, as per Schedule 3 of Companies Act. So in our statement of P&L or profit and loss account, only revenue expenditure will be recorded, whereas capital expenditure will be shown in the balance sheet as an asset. Okay, sir. Now coming to GST. In GST, we call it as capital goods. What is the meaning of it? Our definition. Capital goods means goods, the value of which is capitalized in the books of accounts. So the value of which is capitalized in the books of account of the person claiming the ITC, and which are used or intended to be used in the course or furtherance of business. So now, for example, machinery, vehicle, furniture you have purchased. Why? To use it in your business. If you are using it for personal purpose, then no, you cannot claim the credit. So that is not treated as capital goods also. Clear? Okay, sir. Now input. In general term, input means raw material, guys. So raw material, why will you purchase? To use it in the production of your output. Agree? So you will use it in the manufacturing process to convert that into your output. So in GST, we call it as input. So you can also just write it there, means for capital goods, fixed assets, so that, okay, it will be easy for you to relate to your accounting knowledge. And your raw materials is nothing but input. Okay. Input means any goods other than capital goods used or intended to be used by a supplier in the course or furtherance of business. So even inputs, it should be used in your business. If it is used for personal purpose, no, sorry, thank you. It is not an input as per GST. Okay. Next, coming to input services. Input service means any service used or intended to be used by the supplier in the course or furtherance of business. Now, I am the supplier who is providing outward supply. So for me, one of the service I require, legal service or some architect service I need, I have taken it. So for that, it is an inward supply for me. So input service I have taken, I would have paid input tax. Can I claim the credit of it? Yes, provided that input service is taken for the purpose of business. Yeah. Yes, sir. So capital goods, input services. So any tax paid on this three is called what? Input tax. Chalo. So 262. Input tax in relation to a registered person means central tax, that is CGST, or state tax, that is SGST, or integrated tax, we call it as IGST, or union territory tax, we call it as UTGST, on any supply of goods or services or both made to him. Made to him means it is an inward supply for me. Yeah, not made by him. There is a difference, made by him. If it is like made by him, it will be outward supply. But here it is made to him, but does not include the tax paid under composition levies. So please be careful. So input tax does not include tax paid under composition scheme, because we have learnt in section 10, if a person has opted for composition scheme, he cannot claim input tax credit. Also, the recipient who is purchasing the goods from the composition person, he cannot claim input tax credit. He can also not claim the input tax credit. So that is why in the definition itself they have told input tax does not include tax paid under composition scheme. Yeah. Yes, sir. Fine. Next, input tax credit. Input tax credit means the credit of input tax. Okay, very important definition and very tough definition. Input tax credit means the credit of input tax. Okay, and this is the definition given in the Cgst Act under section 2 clause 63. Okay, now inward supply. Inward supply in relation to a person shall mean receipt of goods or services or both, whether by purchase, acquisition or any other means, with or without consideration. Whether consideration is there or not, that is secondary. So you have taken some goods or services. In that case, that is called inward supply for you. Clear? Yes, sir. Next, there is something called as zero rated supply also. It is important, guys. Actually, this is covered in section 16 of Gst Act. What is zero rated supply is covered in section 16 of Gst Act. But here, in this chapter, we will be using this zero rated supply in some places. That is why I have also given the definition here. Yeah. So what is zero rated supply? Zero rated supply means any of the following supplies of goods or services or both. Namely, it has two things. Exports of goods or services or both. Export of goods or services will always be zero rated under GST. Actually, it is an interstate supply, taxable supply, but the rate is zero rated. The rate is zero rated. Okay, sir. Next, supply of goods or services or both to a special economic zone developer or special economic zone unit. So if there is any supply which is made to special economic zone developer, the person who has developed the special economic zone, like real estate developer, the person who has developed it. For example, let me give an example. Now, the government has notified that Electronic City in Bangalore is a special economic zone. Now, they have given the contract to monthly developers to build that area, to develop that area. So, monthly developers is whom? Special economic zone developer. So, anything which is supplied to monthly developers in this Electronic City is a zero rated supply. Okay. Next, whoever is going and set up their business in special economic zone, assume Infosys, TCS, they have operations in special economic zone, which is Electronic City in Bangalore. So, if you supply anything outside SEZ to SEZ, which is like Infosys or TCS in Electronic City, it is always treated as zero rated supply, guys. So, for GST purpose, special economic zone is treated as an area outside India. It might be in India, it might be in the same state, it might be in the same city, but still, if you are supplying anything to a person who is in special economic zone, we will treat it as zero rated supply. That is at par with export. It is treated at par with export, guys. Is that clear? So there are only two supplies which are zero rated supply. So zero rated supply is one of the special supply, one of the special kind of supply. Why? Because if your outward supply is zero rated supply, you will not pay tax on your outward supply. It is taxable, but zero rate. Okay. But you can claim the credit of your input tax. Whatever tax you have paid on your inward supply, you can claim a credit of it. Sir, how is it possible? Because outward supply is zero rated, so I will not pay tax. So on inward supply, I would have paid tax. How to claim the credit of it? So in that case, you will be eligible for input tax credit now. You can claim a refund of it. You can claim a refund of it. We will be learning more about this in refund topics. Clear, guys? Interesting. Fine. As of now, just understand what is zero rated supply. Next, one thing related to this, there is something called as exempt supply also. You have already learned the definition of exempt supply, which is given in section 2 clause 47. What is exempt supply? Exempt supplies includes three things. Nil rated supply, exempt under section 11, whatever exempt supply is under section 11 or 6 of IGST Act, 11 of CGST or 6 of IGST, and non-taxable supply. non-taxable. These three are treated as exempt supply under GST. And if your outward supply is exempt, then you cannot claim input tax credit on your inward supply. That is one conditions are there. Yeah, fine guys. These are some basic definitions which you should be knowing to discuss, because when we proceed with this provisions or this chapter, we'll be using the terms like input service, capital goods, input tax and all. So it is good always at the beginning itself, you know what exactly these are. Yeah, yes sir. Chalo. So now I have also given the list of sections which we would be covering in this chapter. That is 16 to 21 talks about input tax credit. It is covered in input tax credit chapter. These are some main sections which we will be covering, guys. Then we will be covering some section like payment section 49, 49A and 49B, which talks about like how to utilize the credit, how to pay tax, when to pay and all. It is covered in section 49. We will be covering this at the end of this topic, at the end of this chapter. And some more section also are there which are connected to this. For example, 143, which talks about job work, something like that. Here and there, input tax credit portions are also connected to other portions. So those part also we might be covering it here. Clear? And our today's agenda is to cover first two sections, guys. So come to your notebook at the beginning where you have written section numbers. So whatever sections we will be covering it today, I will make you to write there. So under Cgst Act. So under Cgst Act, we are done till section 15, guys, which talks about value of supply. Next you write 16. Next you write 16 there. So in the content you write eligibility and conditions for taking input tax credit. Eligibility and conditions for taking input tax credit means to claim by the recipient. And here whenever we are discussing anything related to input tax, guys, we should always think from recipient point of view, because he is the one who will claim credit. Agree? Yes. And definitely he will also be a supplier, because when he will claim credit is only when he is also a supplier for one or the other persons. Okay. Next you write section 17. Next 17. Apportionment of credit. For the spelling you can look here. Apportionment of credit and blocked credits. So this is our today's agenda, guys. So we'll be covering these two text sections. So there are various subsections for this. So in detail we will be covering one by one. And also I have given a lot of illustrations, examples on these topics also, guys, because it is very much necessary for you to understand also, because the provisions when you read, it may not give a clear-cut clarity. Sir, what is it? How is it exactly applicable? Anta? So that is why then and there itself I have given various illustrations so that okay, you will have proper clarity. And once we are done with the provisions, we will also be solving the problems on the same, guys. We will also be solving the problems on the same. Chalo. First, let us discuss the provisions. Coming to section 16. Eligibility and conditions for taking input tax credit, section 16. It has various subsections. One by one we will discuss. I have given it in the order itself, subsection 1, 2, 3. And see, guys, this is also one more important thing which I need to tell. To the extent possible, maximum extent I can tell, I have arranged my study material in the section order, so that it would be easy for you guys to study. When you study something in the order, it will be easy for you to remember. Agree? So my study material also I have arranged to the maximum extent in the section order. So here also you can see. So till last chapter we have covered section 15. So now we will be covering section 16. Under that, one by one point I have given, and it is in the subsection order. Subsection 1, subsection 2, subsection 3, like that. Clear? Chalo, we'll start with subsection 1. Every registered person shall be entitled to take credit of input tax charged on any supply of goods or services or both to him, which are used or intended to be used in the course or furtherance of business. Means whatever input or input service or capital goods you are purchasing, if you are using it only in your business or to be used in your business, that is in the future, only then you can claim the credit. Sir, it is like, should I claim the credit only when I am using it? No. Even if you are using it in the future also, means for example, capital goods, you have purchased it, you will start using it from the next month. Can I claim the credit now? Yes. If all other conditions are satisfied, you can claim it, no problem. And the said amount shall be credited to electronic credit ledger of such person. So whatever credit you are eligible for, that amount will be credited to your electronic credit ledger on your GST profile in the GST portal. Okay, this is all about the subsection 1. So subsection 1 tells simple, whatever inward supply you are taking, use it in your business. Only then you will claim the credit. Okay, sir. Next, subsection 2. Subsection 2 has clauses. No registered person shall be entitled to the credit of any input tax in respect. See, here and all we are using input tax, inward supply and all. So that is why I have given the definition at the beginning itself, guys. If you know exactly, okay, what is input tax, inward supply and all, it will be easy for you to connect to these provisions. Yeah, let me repeat this subsection 2. No registered person shall be entitled to the credit of any input tax in respect of any supply of goods or services or both to him unless, means recipient can claim the credit only if the following conditions are satisfied. Only if the following conditions are satisfied. What are those? One by one. And you can see here, they are trying to tell no registered person, means recipient should be registered. And only if the following conditions are satisfied, he can claim the credit. What are those? One by one. All conditions has to be satisfied. It's not like one condition you are satisfied, the other you are not satisfied. In that case, you cannot claim the credit. All the conditions cumulatively have to be satisfied, guys. So clause A, 16 subsection 2 clause A. E is in the possession of a tax invoice or debit note issued by the supplier registered under this act or such other tax paying document as may be prescribed. Now, supplier has issued a document to the recipient. Agree? So recipient, E here means recipient. So recipient should be having a copy of that. Only then he can claim a credit of it. And it can be any copy. It's not like, okay, you should physically have that copy. Even e-copy is fine. Okay. Clause AA. This has been recently added. So that is why only clause A, B, C, D was there. E was there. So now they have added clause AA also. So what is that? Details of the invoice or debit note referred to in clause A. So whatever document the supplier has given to the recipient, it might be tax invoice, debit note or any other document. Okay. Has been furnished by the supplier in the statement of outward supplies, that is Gstr 1 or invoice furnishing facility. We call it as IFF. So the details of outward supplies made by the supplier to the recipient, the supplier should have given the details of this in his Gstr 1 or invoice furnishing facility, guys. And such details have been communicated to the recipient of such invoice or debit note in the manner specified under section 37. So actually it is made automated. So supplier did not go and intimate, hey recipient, I have given my details in Gstr 1 anta. No. As soon as the supplier gives the details of his outward supply in his Gstr 1 or using invoice furnishing facility, it will auto populate to the recipient in his Gstr 2A and 2B, guys. Clear? They have tried to make it automated under GST. Clear? Because supplier would have given, for example, assume I am the supplier who has supplied goods to you or services to you. So with respect to whatever supplies I have made to you, I am supposed to give the details in Gstr 1. So in my Gstr 1, I have given the details. I have made the supplies to recipient, and in your GSTIN, that is GST identification number, I would be knowing it. I would have mentioned it. And what is the value of supply? What is the tax I have collected from you? When I have deposited to the government, everything I would have given the details in my Gstr 1. As soon as I have given the details in my Gstr 1, it will auto populate for you in your Gstr 2A or 2B. Clear? What exactly is Gstr 2A, 2B? We will be learning it in a returns chapter, guys. There is small difference between both. Actually, one and the same, but small difference is there. Both of them are relevant to the recipients, where the input tax credit on their inward supply will be auto populated. Clear, guys? Yes. So next. So clause A is new, guys. So please be careful with it. Now let me take one example also. Sir, now recipient has taken an inward supply. from the supplier. Recipient has paid tax on that. So supplier has collected the tax from the recipient. But supplier has failed to give this detail in his GSTR 1. In that case, can recipient claim the credit? No, sir. They have tried to link because the recipient cannot claim dummy input tax credit. So only if someone has paid the tax, you can claim the credit of it. That is why they have tried to make it automated. So if supplier has not given the details of outward supply in his GSTR 1, what recipient will tell? A recipient will call and push him to give the details in GSTR 1, because until the supplier give the details of outward supply in his GSTR 1, recipient cannot claim the credit. Recipient cannot claim the credit. Okay, sir. So because under previous indirect tax regime and all, many people used to claim credit on the taxes they have not paid at all, on the basis of dummy bills, dummy invoices. But under GST, they cannot do it, because only when one person has told that, sir, I have paid this much tax to the department, they will give the credit to the recipient. If government has not received the tax, or if there is no outward supply, then recipient cannot claim the input tax credit of that. Because if there is no outward supply, there is no question of inward supply for the other person. Yeah, very interesting point actually. Next, B, subclause B. He has received the goods or services or both. That is, the person, that is the recipient, he has received the goods or services or both. So should he literally receive it? See, even deemed received is also covered here. For example, please pay attention. We call something called as bill to ship to transaction. Now, supplier. Recipient has ordered supplier to purchase the goods. So recipient is purchasing the goods from the supplier. Recipient has paid for it. But recipient told, hey supplier, supply this to my consumer or customer. So customer is whose customer? He is recipient's customer. So recipient purchased the goods from the supplier and he asked the supplier to supply that to the customer, or he asked it, delivered it to the customer. So in this case, it might be, the goods might be received from the customer, but still, who is the deemed recipient? R. R is the deemed recipient, because supplier will collect the payment from recipient, issue the invoice to the recipient. Here actual purchaser is recipient. Goods might be delivered to C, no problem. Who is the deemed recipient? R. So can he claim the credit? Yes, even though the goods are received from C, R is considered as deemed recipient and he can claim the credit. Clear? Means they are trying to tell in this point, you cannot claim the credit for something which you have not received. That is what they are trying to tell. Means, sir, I will purchase the goods in next year. I will receive the service in next year. Can I claim the credit now? No, sorry, thank you. When you receive it, claim the credit. That is what they are trying to tell in this point. So we call this as bill to ship to transaction, guys. Supplier is billing to whom? Bill to R. Whereas goods are shipped to whom? Shipped to C. We call this as bill to ship to transaction. So in this case, who is the actual recipient for GST purpose? R only. Even though the goods are received by C, still R is the recipient for GST purpose. Chalo. The registered person need not receive the goods or services himself. So he himself need not receive the goods. It is sufficient even if the goods or services are delivered to some other person on his direction. So recipient has given the direction for the supplier to deliver the goods to C. Even in that case, R is deemed be received. Example, A is a trader who places an order on B for consignment of soda ash. So A is the recipient, B is the supplier, guys here. A receives a buying order from C of the same quantity of soda ash. Okay. So it is like this. A has placed the order with B. So B will supply the goods to A. But A has received the order from C. So C is the customer of A. Okay. Fine. Next. A instructs B to deliver the goods to C. Okay. A is telling, hey B, don't deliver the goods to me. Whatever I am purchasing from you, straight away deliver it to C. Okay. Though the goods are not physically received at the premises of A, Section 16(2)(b allows ITC of such goods to A. Now A is the person who has purchased the goods from B. It might be delivered it to C, but still, who is the deemed recipient? A. Can A claim the input tax credit? Yes. Even though the goods are received from C, it is understood, it is deemed that it is received by A and A can claim the credit of it. Clear? And there is one more supply actually here. There are two supply. From A to C, there is one more supply, which is outward supply for A. You will pay tax on that. Okay, we are talking about input tax credit. The question is, can A claim the ITC? Yes, he can claim. Clear? Yes. Next, coming to clause C. Subject to provisions of section 41 or 43A, the tax charged in respect of such supply has been actually paid to the government by the supplier, either in cash or through utilization of input tax credit admissible in respect of said supply. Means the supplier, whatever tax he has collected from the recipient, only if he has paid it to the government, the recipient can claim the credit. Clear? Now see, supplier has collected the tax from the recipient. So if he has any input tax, he would have claimed it. Remaining, you would have paid to the government, no problem. But what they are trying to tell in clause C is, the supplier should have paid tax. At least if it is in cash also fine, or else if he has utilized input tax against that also is fine. But he should have paid it. Okay, or else it should be like, okay, whatever tax he has collected, he has either adjusted input tax against it, or else he has paid it to the government. Anyone at least. Yeah, then only recipient can claim credit. So what are they trying to tell here is, recipient can claim the credit only if the government has received the tax. If not, for example, supplier, please pay attention here. Supplier has collected the tax from the recipient in the month of June. Okay. He has not deposited in the month of June. He has not deposited that amount in the July, August. Can the recipient claim the credit? No, sir. So assume the supplier has deposited this tax somewhere in November. So when can the recipient will be eligible to claim credit? Only after November. That is after the date of deposit of tax by the supplier. Only after that date, the recipient will be eligible to claim the credit. Because government will not give the credit of something which they have not at all received. Okay. Next, D. E means recipient has furnished the return under section 39, that is Gstr 3B, because in Gstr 3B only he will give the details of input tax, whatever he has paid based on whatever is reflecting in his Gstr 2A, 2B, and he will claim it. So to claim input tax credit, he has to file Gstr 3B, guys. Clear? So these are the totally 5 clauses under section 16(2). There are some provisos also here. Let me read that. Provided that where the goods against an invoice are received in lots or installments, the registered person shall be entitled to take credit upon receipt of last lot or installment. That is, sir, I am receiving the goods in lot. I have order for 1 lakh units. I am receiving 10,000 units every month. When can I claim the credit? Only when you receive the last lot. That is, only when you receive totally full 1 lakh units, you can claim the credit on full 1 lakh. No claiming credit proportionately here. Sir, every month I am receiving 10,000 units. Can I claim the credit? No. You can claim the credit only when you receive the last lot on the entire 1 lakh units. Yeah, I have illustrations on this. Come to illustration 1 in the next page. There is one illustration here. Come to illustration 1. Yeah, let me read. Mr. A orders 30,000 tons of goods which are to be delivered by the supplier, where 3 lots of 10,000 each in May, June and July 21. The lots are sent under a single invoice with the first lot, and the payment is made by the recipient for the value of supply plus GST, and supplier has also deposited the tax with the government. When can Mr. A avail ITC? So the scenario is like this. Mr. A orders 30,000 tons of goods which are delivered in 3 lots, 10,000 each, in the month of May, June, July. In the first lot itself, the supplier has sent the invoice and also recipient has paid the tax, and supplier has also deposited the tax to the government. Can the recipient claim the credit in the month of May only? The question is no. Sorry, the answer is no. Why? because he has not yet received the goods completely. He is receiving the final lot when? In July. Only after that he can claim the credit, provided other conditions all are satisfied. Solutions. The solution: the 3 lots are supplied in May, June and July. The ITC is available to Mr. A only after the receipt of 3rd lot, that is in July 2021. The reason is simple. One of the conditions to avail ITC is receipt of goods, which is completely only after the last lot is delivered. This is as per the proviso. Wherever provided will be given, guys, that will be called a proviso. Proviso to section 16(2). Clear? Yes, sir. So only after receiving the 3rd lot, he can claim the credit, recipient. Okay. Next proviso for section 16(2). Provided further that where a recipient fails to pay to the supplier of goods or services or both, the amount towards the value of supply along with the tax payable thereon within a period of 180 days from the date of issue of invoice by the supplier, an amount equal to the input tax credit availed by the recipient shall be added to his output tax liability along with interest thereon in such case, in such manner as may be prescribed. What are they trying to tell you? Let me explain this with an example. Actually interesting. Now, supplier has supplied the goods to the recipient. Let us take our own old example. Supplier has issued the invoice for 1 lakh plus GST 1,10,000. Okay. And it is a credit sales. So recipient will pay for this in the future. Now assume the supply has taken place in June 22. So time of supply is in June. Okay. So assume the invoice is issued on 10th June. Let me give the date also. Okay. So invoice is issued on 10th June. So assuming this is only time of supply. So supplier is liable to pay tax on or before 20th of July. Agree na? Yes, sir. Assuming forward charge is applicable. So forward charge is applicable. I repeat. Supply has taken place in June 22. So time of supply is on 10th June. On what day invoice is issued? So date of invoice is 10th June. On that day only time of supply as per section 12. Okay, sir. Now, so invoice is issued for 1 lakh plus GST 10,000, which is coming to 1,10,000. Recipient has told supplier, I will pay you. Give me some time. Okay. Now, what happens when 20th July comes? When 20th July comes, supplier has to pay from his out of his pocket. He has not received the money from the recipient, but still, who has the liability? Supplier. So even though no problem, if the supplier has not received the amount from the government, from the recipient, still he has to deposit whatever tax on his supplies he has made in June within on or before 20th July. On or before 20th July. Okay. Now, recipient has not paid to the supplier still whatever supplies the supplier has made in the month of June, the time of supply is in June. So he has to pay the tax within 20th of July. Even though he has not collected it from the recipient, he has to pay out of his pocket. Okay. Supplier has paid it. Now, all other conditions are satisfied. All other conditions are satisfied. That is, whatever conditions are given in section 16, supplier has deposited the tax. He has given the details in his Gstr 1. Recipient has received the goods. Recipient is having the invoice copy. So, recipient, can he claim the input tax credit? Yes, he can claim it in July. That is, after the tax has been paid by the recipient on or before 20th July, the recipient can claim ITC. Sir, he has not yet paid. No problem. Supplier has paid out of his pocket. Government has received the money. So in that case, can recipient claim the ITC? Yes, he can claim the ITC. So he can claim the ITC once the tax is deposited by the supplier and he has given the details in Gstr 1. Okay, sir. So recipient will claim the ITC provided all other conditions are satisfied. Okay, sir. Now what this proviso is telling is, if the recipient has already claimed the ITC, how much? 10,000. But as he paid it, no, sir. Actually, supplier has paid it. But government, it's told it's not my headache, it's supplier's headache. Why will I bother? I have received 10,000, I am giving credit to recipient. Okay. So supplier can hold this, by not disclosing the details in GSTR 1. But again, he will be penalized because whatever supplies he has made in the month of June, he has to disclose the details in GSTR 1, which he will file within 11th of July. So obviously he would have given the details even in GSTR 1 also. Fine. Now, if the payment is not made within 180 days from the date of invoice, within 180 days from the date of invoice, if the payment is not made, means they are approximately giving 6 months time. Even within 6 months, if the recipient has not paid, sir, recipient has not paid 1 lakh also, he has not paid 10,000 also, sir. In that case, whatever ITC has already claimed, it will be added back to his output tax. Means on 181st day, after the expiry of 180 days, so from the date of issue of invoice, so date of issue of invoice is 10th June, calculate 181st day from there. So on that day, 181st day, that is after the expiry of 180 days, whatever credit he has already claimed, which is 10,000, will be added to his output tax plus 18% interest on it. 18% interest from when to when? When did you claim the ITC? From that day. Assuming you have claimed the ITC on 20th July only. As soon as the taxes are paid, you have claimed it. Okay. From then till the taxes is added to output tax and you have paid it, you are the one who are supposed to pay it now. Okay. So till that day, interest at 18% on 10,000 will be charged. On 10,000, 18% interest from 20th July till you pay this 10,000 will be charged, guys. Now, supplier has paid 10,000 already to the government now. So if by chance, if this is added back to the output tax of the recipient, then supplier, what he has already paid to the government, he will get a credit of it. Because government now is collecting is from the recipient. So supplier Papa is already suffering within 180 days, he has not received. So it might be a case of bad debt. So what happens? Government will give a credit of this. Will give a credit of this to the supplier. Whatever he has already paid out of his hand. Okay, sir. So from supplier point of view, it is not important for us to understand. What is important is, as per this proviso, if recipient has not paid the amount of consideration plus GST to the supplier within 180 days from the date of invoice, then on the 181st day, whatever input tax he has claimed will be added to his output tax, including interest at 18%. Let's see that provision. Let me read this provision again. Please pay attention, guys. Provided further that where a recipient fails to pay to the supplier of goods or services or both, the amount towards the value of supply along with the tax payable, means consideration plus GST. In my example, totally 1,10,000 within a period of 180 days from the date of issue of invoice. So 180 days will be counted from when, what date? Date of issue of invoice. Okay. By the supplier, an amount equal to input tax credit availed by the recipient shall be added to his output tax liability. When? On 181st day. On 181st day, whatever input tax credit you have already claimed in July, it will be added back after 6 months. And please be careful, 180 days will not be counted from 20th July. It will be calculated from the date of issue of invoice, which is 10th June. Okay, recipient has claimed input tax credit on 20th July, no problem. 180 days will be counted from date of issue of invoice. Clear? Yes, sir. Next, interest will be paid at 18% from the date of availing the credit till the date when the amount added to the output tax liability is paid. Now, when did the recipient claim the credit? 20th July. From that day, on 10,000, 18% interest will be charged. Till when? Till you pay this amount. Till you pay this amount. So assume this amount is paid somewhere in after 6 months means. So somewhere assume I am paying it in April 15th. I'm just taking 15th April 23. So interest will be charged from 20th July to 15th April, approximately. I'm just taking random dates. So from that date to this date, the interest will be charged on 10,000 at 18%, guys. Clear? However, once the recipient makes the payment of value of the goods or services along with the tax, he will be entitled to avail the credit again without any time limit. Now, sir, once he pay this tax, can he claim the credit? Yes, he can claim it. Okay, once he pay this, can he claim back the credit? Yes, but only for tax part, not for interest part. Okay, because whatever credit you have claimed, now we are adding it to output tax, we are asking you to pay it. Once you pay it, can you claim the credit? Yes, you can claim the credit. Exceptions means this proviso is not applicable in the following scenarios. That is 180 days limit is not applicable in the following 3 scenarios. What are those? This condition or this proviso. Let me put this R mark. Okay, you can join this. Okay, so 180 days concept is not applicable in the following 3 cases. This condition of payment of value of supply plus tax within 180 days does not apply in the following situations. Which are those? Supplies on which tax is payable and reverse charge. So if RCM is applicable, who is the one who is liable to pay tax? Recipient. Only when tax is paid, the recipient will be able to claim credit. Na? Yes, sir. So in that case, no question of applying this 180 days concept. Because supplier will not pay out of his pocket and later collect it from recipient. No, because under RCM, recipient is the one who will pay tax. He is the one who will claim the credit. Okay, when can he claim the credit? Only if the amount is paid to the government. If not, he cannot claim the credit. Agree? So in that case, this proviso is not at all applicable. No use of this proviso. Agree, na? Yes, sir. Next, deemed supplies without consideration as per section 71C read with schedule 1. So schedule 1 read with section 71C, there are 4 paras there. So 4 paras gives 4 different transactions where even without consideration, it is still a supply. In that case, obviously there is no consideration. Recipient is not paying anything to the supplier. You are telling it is a supply. So when it is a supply, obviously recipient is not paying anything. So in that case, is this proviso applicable? No, because there is no consideration. When there is no consideration, why will the recipient pay? Recipient is not paying anything as there is no consideration. Agree? Yes, sir. Second one. All 4 paras are covered there. Then the last one. Additions made to the value of supplies on account of supplier's liability in relation to such supplies being incurred by the recipient of supply as per section 15(2)(b). In the last chapter we have seen. As per section 15(2)(b), if the liability of the supplier is paid by the recipient, then that amount will be added to calculate value of supply. Now the question is, did supplier receive this amount? No. Recipient paid it to someone for whom supplier was liable to pay. So in that case, recipient is not directly paying this amount to the supplier. Still, 180 days concept is not applicable here. Okay, because recipient is not paying it to suppliers. Recipient is paying to someone for whom supplier was liable to pay. In that case, will it be treated as not paid to the supplier and 180 days concept will be applied there? No, sir. It will not be applied. So these are the 3 exceptions where 180 days proviso is not applicable. Approximately 6 months, guys. Try to remember like that. Yeah, I have an illustration on this. Let us do that. Come to illustration. Come to illustration 3. Illustration 3. Invoice dated 1st January 2021 received by the recipient. So invoice is 1st January 2021 received by the recipient involving taxable value of 1000 and ITC 180. The recipient availed the credit against such invoice on 30th Jan 2021. So he has already claimed the credit on 30th Jan, provided all other conditions are satisfied. Okay. It made payment to the supplier against such invoice on 30th September 2021. Recipient is paying to the supplier when? 30th September 2021, after almost 8 months. So after 180 days, yes, sir. So is that proviso applicable? Yes. In this case, since the recipient fails to make the payment to the supplier within 180 days from the date of issue of invoice. So date of issue of invoice is 1st January. So the payment is not made within 180 days. It is liable to add such credit in its output liability immediately on the expiry of 180 days. So after the expiry of 180 days from 1st January, you need to add back whatever 180 rupees credit you have already claimed. Okay. From the date of invoice. Additionally, it is liable to pay interest on 180 at 18% calculated from what? Date of availing the credit. What is the date of availing the credit? 30th Jan 2021. Okay. So from 30th Jan 2021 until such addition in the output tax liability is paid. So on the 181st day, 180 rupees will be added to the output tax of the recipient plus 18% tax on this from 30th Jan till you pay the amount. Interest will be calculated till you pay 180 plus interest till the date you pay that. Clear, guys? Is that clear? Yes. And sir, should we write, see, even in the exams, if by chance if there is any question asked and all, you don't calculate exactly what is the 181st day, what is the 180th day and all. So approximately from the dates, if you see, you will be able to tell. Okay, if it is after 6 months, it is like payment is not made within 180 days. So you explain the provisions and give the answer. More than enough. Yeah. Yes. Yes. Fine. So the other two are other provisions. We are done with subsection 2 and all the clauses and also proviso. Subsection 2 is a bit lengthy because it has clauses as well as provisos. Please be careful with it. Next, subsection 3 is actually related to income tax. Now, if any capital goods is purchased, assume I have purchased a plant and machinery for 10 lakh. Okay, sir. Plus, I have paid GST on it 1,80,000. I have paid GST on this 1,80,000. So totally, I have paid 11,80,000. Now in income tax, please pay attention. In income tax, section 43(1) of Income Tax Act, which talks about actual cost, it tells if any tax is paid on the purchase of the capital goods, or there we call it as assets, which is used for the purpose of business, you can add it to the cost of the asset. So actual purchase price is 10 lakh. So if you have paid any taxes on the purchase of the asset, you can add it, provided you are not claiming the credit of it. You are not claiming the credit of it. That is, you are not claiming the credit of tax what you have paid in your GST means, then you can add it. That is what section 43(1) is telling. Now assume you are not claiming the credit of input tax. So you are adding 180,000 on this. So you will get, what is the cost for income tax purpose? 11,80,000. And on this, you will start claiming depreciation as per section 32. Whatever rate is applicable for plant and machinery, the rate is 15%. You will start claiming depreciation. Agree? And there is something called as additional depreciation also in the first year of business. So that and all is a different story, but still. On what value will I claim input tax credit? Sorry, on what value will I claim depreciation? I will start claiming on 11,80,000 from the first year. Agree? So in that case, input tax credit you are not claiming and tax amount is added to your cost. In that case, section 16(3) is telling, section 16(3) of Cgst Act is telling you cannot claim ITC. As whatever tax you have paid on your purchase of capital goods is added to the cost to claim depreciation, you cannot claim ITC. You cannot claim ITC. Next, you have one more option. No, sir. Okay, fine. I will take only 10 lakh as my cost. I will calculate depreciation as per section 32 on 10 lakh. I am not adding whatever GST I have paid on my inward supply. I am not adding it to the cost. So I am taking cost only as 10 lakh. In that case, 16(3) is telling you can claim the credit of whatever you have paid on your capital goods. 1,80,000, you can claim the credit of it. You cannot get double benefit. That's what they are trying to tell. So I repeat, if tax paid on your inward supply, which is a capital goods, then if that tax is added to the cost to claim depreciation as per income tax, then in GST you cannot claim the credit of it. Or you have one more option, that is whatever tax if you have paid, if it is not added to the cost to claim depreciation under income tax, then you can claim the credit of the same under section 16(3) of Cgst Act, guys. Clear? So 16(3) is connected to income tax provisions. Hope you guys remember it, because you would have learned all this depreciation thing and all in executive, and my students also. I was the one who taught you guys like taxation or tax laws at executive level. Chalo, fine. We'll see what is section 16(3) telling. Where the registered person has claimed depreciation on the tax component, my first example, of the cost of capital goods and plant and machinery under the provisions of Income Tax Act 1961, like any capital goods, the input tax credit on the said tax component shall not be availed. So if you are added the tax to your cost to claim depreciation, then ITC is not available. In other words, either depreciation on tax component can be claimed under Income Tax Act, or ITC of such tax paid can be availed under GST laws. Okay, any one benefit you can claim. Sir, why are they restricting it like this? Is, see, if you have added the tax to your cost 11 lakh 80, you will start claiming depreciation on 11 lakh 80. So the amount of depreciation will be more. So every year the amount you debit to P&L account in the form of depreciation will be more. So your profit will be automatically going down. Agree, on which you will end up paying less taxes to the government under income tax. So under GST they are telling, okay, we are not allowing the credit for the same, as you are claiming more depreciation on your assets in the income tax. Chalo. Now coming to the last subsection, this is important. See, there are chances that you may confuse with subsection 4 to proviso, which is given to section 16(2). These are two different things. So let me explain it before only. See, whatever proviso we learned here, that is 180 days concept is there, na? That is the time limit given by the department to the recipient to pay the amount to the supplier. If it is not paid within 180 days, then if the recipient has already claimed the credit, it will be added to his output tax liability, including interest at 18%. But coming to subsection 4, they are giving the maximum time limit to the recipient to claim ITC. You cannot claim ITC whenever you want. There is some maximum time limit which is given for you. Within that time, you will be able to claim credit. Sir, what if I don't claim the credit within that time? Then your credit will become lapse. You can no more claim that. Agree? So there is some maximum time limit which is given to the recipient to claim the input tax. What is it? It is given in subsection 4. A registered person shall not be entitled to take input tax credit in respect of any invoice or debit note for the supply of goods or services, or both, after the due date of furnishing the return under section 39. Section 39 talks about Gstr 3B, guys. Clear? So section 37 to 48 talks about returns, which would be covering in the returns chapter. We have not yet done with that. But whatever is relevant with respect to Gstr 1, 3B and all, I have already explained some information. So that much is relevant as of now. More than enough. So the due date of furnishing the return under section 39 for the month of September following the end of financial year to which such invoice or debit note pertains. So the due date to file. So the return under section 39 means you can just mention Gstr 3B. Okay. The due date to file Gstr 3B for the month of September is 20th October, guys. 20th October. Okay. Or actual date of filing the annual return. Annual return means Gstr 3B. Sorry, Gstr 9. Annual return. Whichever is earlier. Sir, what are they trying to tell? I have two illustrations on this, but before that, I will also give an example and explain this. Listen carefully. There is an invoice which is related to financial year 21-22, guys. There is an invoice which is related to 21-22. That is, I have made a purchase in 21-22 on which I have paid input tax of rupees 80,000. So within what time I can claim this credit is given under section 16(4). 16(4) is giving 2 days. 2 days. First day is due date of filing the September month return of next year. So for financial year, the invoice is relating to financial year 21-22. Okay. Take September 22. September 22 means next year. Okay. What is the due date to file that return? 20th October 22. Okay. You need to take due date, not the actual date. Okay, sir. So this is the due date to file Gstr 3B for September 22. That is September of next year. Okay. Then for this financial year, I am supposed to file annual return. So for financial year 21-22, annual return in Gstr 9 should be filed. Means the due date to file Gstr 9 annual return is actually 31st December of next year. I repeat, the due date to file the annual return is 31st December of next year. But they are not talking about the due date here. They are talking about actual date. So obviously the actual date will be any day on or before 31st December. 31st December is the deadline. Anytime before that you can file the annual return. So here they are talking about actual date, guys. So here it was due date. Whereas second point, actual date. So obviously actual date will not remain fixed from person to person. It varies. So assume in my example, the recipient has filed it on 10th November. 10th November 22, he has filed GSTR 9 for the financial year 21-22. In that case, compare these two. Which is earlier? The due date for September for filing GSTR 3B, 20th October, and actual date of filing the annual return for financial year 21-22. Which is earlier? Whichever is earlier. 20th October 22. So within this time, the credit of 80,000 should be claimed. If not, you cannot claim it after 20th October. So from 21st October, this will become lapse, guys. So for any invoice from 1st April 21 to 31st March 22, you can claim the credit of that within what time? Within 20th October 22, not after that. Not after that. Is that clear, guys? Come on. I have two illustrations on that. We will do it. But before that, one exception is there. The time limit under section 16(4) does not apply to claim for reavailing of the credit that has been reversed earlier. We saw one proviso. Sir, recipient has already claimed the credit, but he didn't make the payment within 180 days. So on 181st day, whatever credit he has already claimed is added back to his output tax. He paid that amount including interest. Can he claim the credit of that? Yes, it is called as reclaiming of credit. For reclaiming of credit, this time limit is not applicable. Okay, so for reclaiming of the credit, whatever we have discussed already under the proviso, this time limit is not applicable. This time limit is only for claiming the credit, not for reclaiming the credit. Clear? So recipient has already claimed the credit, but as he didn't pay the amount within 180 days, it was added back to his output tax. And after he paid the output tax, he can reclaim that credit. For reclaiming, this condition, time limit is not applicable. This is only for claiming, that is for the first time. Is that clear, guys? Yes. I have two illustrations on that. Come to 4 and 5 in the next page. Illustration 4. Illustration 4. Invoice is dated 31st July 2021. Okay, so it is related to which financial year? Financial year 21-22. Okay, sir. Next, annual return for financial year 21-22, that is for the year to which invoice relates to, is filed on 30th November 2022. So actual date of filing the annual return for the financial year 21-22, that is for the year for which invoice relates to, is what? 30th November. Actual date of filing annual return. Okay, sir. Now, this question is on 16.4. You can just mention 16.4. Even next one is on 16.4. Okay. Invoice is related to financial year 21-22. Annual return for financial year 21-22 is filed on 30th November 22. Due date to file GSTR 3B for the month of September. That is September of next year. Not for the year in which invoice is related. So we need to take the September of next, because some extra time should be given. You cannot tell claim it within the same year. Some at least 6 months, 7 months extra time should be given. Invoice is related to 21, 22. At least give me some 6 months extra. Okay. So the date of, where is it? Annual return for financial year 21-22 is filed on 30th November. Due date to file GSTR 3B for the month of September 22 is 20th October 22. Earlier of the two dates is what? 20th October. Before this date, credit should be claimed. In this case, recipient will be able to claim the input tax credit not later than 20th October. Means on or before 20th October, he has to claim it. ITC needs to be claimed and to be reported in GSTR 3B for September 2022 to be filed on 20th October. So he has to claim it before 20th October. How will he claim it? In GSTR 3B. So on or before 20th October, which GSTR 3B he will file for September. So in that he will claim the credit, because credit will be claimed in GSTR 3B by the recipient, which he will file on or before 20th of next month. Clear? So in the GSTR 3B, which the recipient will claim for September month, on or before 20th October. For September, he will file GSTR 3B within 20th October. So in that return, he will claim this credit. Maximum. Before that, any time he can claim. Okay. Then coming to illustration 5. A Limited received invoice dated 10th April 2021. Again related to financial year 21-22. Okay, invoice is related to financial year 21-22. Containing input tax of rupees 1 lakh. A Limited filed its annual return for financial year 21-22 on 30th August 2022. This is 2022. Solution. Invoice is related to financial year 21-22 and annual return for 21-22 is filed on 31st August. Due date to file GSTR 3B for the month of September 22, that is September of next year, is 20th October. Earlier of these two dates, in this case, annual return is filed very late, early. Okay, so in that case, what is the earlier date? 31st August. In this case, A Limited will be able to claim input tax credit not later than 31st August. 31st August 22, actually. 22. 31st August 22. Hence, A Limited will have to avail the report and avail the credit and report such input tax credit in GSTR 3B for the month of August. So whatever GSTR 3B will file, he has to claim the credit in that on or before 31st August. Clear? Yes, so fine guys. So these are the two illustrations. On 16.4, I think I have one illustration on 16.3 also. Yeah, second one. Come to illustration 2. This is on 16.3. Mr. X has procured a machinery for INR 25 lakh and paid GST of rupees 4,50,000, 18% GST. He has capitalized the invoice value and will claim depreciation of the entire invoice value of 29,50,000. Okay, so he has capitalized GST part also, and he will be claiming credit depreciation on what amount? 29,50,000 including GST. Please advise on the availability of ITC. If the depreciation is claimed on the ITC component, ITC cannot be availed, and hence Mr. X will not be able to avail ITC in this case. He will not be able to avail ITC in the given case, guys. Is that clear? Yes, sir. So we are done with section 16. We have covered all the topics here. Yeah, fine guys. We'll stop this video here. We are done. We have discussed section 16 in detail. You guys can go through it. So now we will stop this recording here and we'll continue with section 17 in the next video, guys. Until then, take care, guys.